Good morning, everyone, and thank you for joining us today at the Tax Tuesdays webinar. This is the deep dive on corporation tax topics for accountants and business owners who want to know in-depth understanding of corporation tax. So my name is Rayhan Aleem. I'm the co-founder of Taxstar, also the founder of Alpha Pro Partners. I'm joined by the much knowledgeable in corporation tax, Rashmi, who's the co-founder of Ecoviz JRB. So Rashmi, congratulations on your rebrand to Ecoviz JRB. Do you want to just give us a quick introduction of how that happened and what that means for all of us?
Yeah, so thank you first of all, and hello to all. JRB is now Ecoviz JRB, which we have announced in March. And then just as an introduction, Ecoviz is one of the top 20 global firms. So as it happens in the audit and accounting field, you have one of the international brands. So we have now co-branded and we are a full member firm of Ecoviz JRB. Ecoviz has a presence in 90 plus countries. So now we have counter office and solutions, especially for taxation when it comes to international taxation or any. So now, yeah, looking forward to a great future from here, inshallah.
Yeah, no, and so we're now we've got the seal of approval where this session is done by a top 20 accounting firm now. So so now we have that. Before I continue, today's topic is going to be about the corporate tax return. Now, there are over 200 fields to fill in on the corporate tax return, and we may not be able to cover all of the topic today. And so what we might do is cover some of it in today's session, and we've got another session in 2 weeks' time. So then we'll continue that session in 2 weeks' time. We will have Q&A at the end. So if you need to do Q&A, if you have any Q&A, then please put them down in the comment section on the LinkedIn events page. And also a disclaimer, we're not giving you advice. We're not telling you how to do it. We're just providing information. If you need to, if you're stuck on your tax return or you need help, make sure you get professional help. And obviously you can contact, Rashmi separately on that, or your whoever's doing your advisory from that point of view. So without further ado, Rashmi, the floor is yours.
Thank you, Rehan. Thank you for the clarity and the disclaimer. Yes, we will be doing another session. And if there are many questions and if you want to do further deep dive practical aspects, we might include our teams, say a Taxstar expert, as well as my team, Ali Asghar, who are very close to the field and what's practically happening on the returns. But we'll try and cover certain aspects today. The return is quite wider subject, and because it touches all the aspects. So when you're filing the return, it's not just the return, right? It's all the interpretation, it's all the fields that are applicable. So it's almost a summary of the whole of the corporate tax. So of course, it needs more discussion than this. What we have done today is a little high level plus some practical aspects which should be considered while filing the returns. And then we would do a further second or third session as required. So what we are covering in this session would be certain insights. The next slide, please, sir. Certain insights on how the taxable person category makes a difference. SBR, the simplest form which many are planning to take, only things to consider and how the SBR will play in if you're filing a SBR return. And then what needs to be considered there. Free zone, we are just brushing it through. Free zone can be a separate discussion, of course, with the free zone webinar that we plan to do. Elections that we have always been talking and highlighting that it is super, super important in the first returns. What are the common pitfalls you can find? Where are the differences coming? And what you need to consider your financials versus your return filing. This is something that you need to know when you're doing your financials finalization, because that's what will be becoming basis of your accounting. And in case you have foreign tax credits, and of course the famous recent penalty waiver. We'll just give you a tidbit on that because the time is short for that. We'll have a Q&A session, of course, as we said, at the end of it. So starting with the next slide.
I just want to add also that this is the first time
Please.
a lot of information is being sent to the FTA for compliance purposes, right? So when it comes to VAT, you've got a few boxes that you've got to fill in. With SPIs, there's only a few bits of information to fill in. But when it comes to the comprehensive tax return, there's so many fields you have to fill in. Making sure you get it right is very important because there's penalties if you have to, resubmit after the deadline date. So just wanted to re-emphasize that point as well.
Yes. Very important, yes, the VAT returns here are very simplified, but because we are doing the corporate tax return, which has the whole of your accounting and not just accounting, your legal documents, your residency, your foreign tax credits, or whatever your applicable cases may be. And if you say about free zone, then the economic substance calculation, your transfer pricing, all the documents and all the fields become very relevant here. So yes, it is super important that you know that these things are properly prepared, and therefore there needs to be a pre-preparation. You do not go and start filing your returns. You have to have a preparation. You need to know that all the data and the information is available with you before you start filling in your taxable tax returns on the portal. So there are basically 9 essential parts for your return. One is the taxable person information. Now, this information is pre-populated and hence becomes important that your portal is correctly updated. Now, we all know that when we log into the portal, they're asking you to update the business activity because there were many activities.
Rashmi, you're breaking up.
Options which were not earlier available, and the activity. This is where the accounting, income statement, comprehensive income, and other data would become. Next slide, Rehan. Sorry.
You're breaking up. Your connection was quite.
Next slide. Sorry.
Your connection was a bit was breaking up. Do you mind just going over this again? Because I think we lost the points that you.
Oh, I am so sorry. Am I audible now? Do you want?
Yeah, you're breaking up again. I think what I can do is while we wait for Rashmi to come back. As she mentioned, there are 3 parts to the form that needs to be filled in, and the taxable information is pre-populated. Also, keep in mind that there's a new rule where if you don't update your information within 20 working days, then you get a penalty of 5,000 dirhams. So it's very important to make sure that your registration details, entity type, financial year, business activities is correct as well. Elections, we covered elections in a previous webinar. Very important, these are one-time elections. And you can refer back to our previous webinars. Are you back?
Yes, I am, and hopefully this is better now. If I break up again, let me know. I'm sorry.
Yeah, just recapping what you mentioned in this slide.
Okay.
And then your accounting schedule, P&L, balance sheet. I think the problem I'm facing with accounting schedule is obviously you would prepare that as per your audited or IFRS accounts, right? But some companies where you don't have that discipline of closing your books and not changing it previously, now you have to have that discipline so you do not change your books. So you in your accounting system, everything's closed, right? No, there's no prior period adjustments anymore. And some companies are quite disciplined like that, and others might not be. And I think that's quite important. But I'm not going to steal your thunder anymore. I'll let you continue with the second part.
No, please feel free, and thank you for pitching in. Apologies again for the connection. So moving on. Then, as you said, the accounting adjustments, these are the adjustments and exempt income. These are the adjustments which come through your participation exemption, or if you're following equity method versus different methods of accounting. This comes from there. If you have any reliefs, if you're restructuring reliefs, then there are adjustments which we talk about later on expenditures. Then your tax credit or any of taxable taxes that you have. There is no advance tax paid, so tax liability would come up, and any for tax credits and your payable amount. Final is the review and declaration. We take it very lightly, but this is a legally binding statement. When you are saying that you have reviewed it, it means you have reviewed it. So there should be a process, internal process with companies in place. There is some documentation of who finally authorized, because this is going to the FTA and this should be taken seriously, especially the first few years till your system are not set. You should be sure that you are declaring the correct, and the correct authorized person is making this declaration. Your schedules after this, what will happen is that why this is so important that you're prepared is not all schedules show up, and everything is like a game based on what you selected as yes or no, which options you selected. Your schedules and further information keep populating or going away from the screen. So it's very important that what you have selected is correct, and then therefore the fields that will be asked, the schedule further which will be asked, and the supporting documents which will be asked will be accordingly tweaked. So each selection at every time is important, and we'll cover a few of them today. So we can start with the returns, with the basics. I think these are the 9 basic major things that we are going to cover. Taxable person, this is super important that we know the taxable person type, and this is going to govern which fields get populated and which options are required for you to fill in. So important that we know our correct taxable person type. If any mistake has happened, because sometimes what has happened is that it's a history that we have selected a wrong category while doing our VAT returns. We were not super serious, especially between individuals to companies, or say companies incorporated. We did not have a concept of NR, non-resident person registering here. So if we have done any mistakes, they need to be sought out before, because the tax impact of being a different taxable person is going to impact your return filing and declaration. So this needs to be rectified, and it takes time to rectify this back and forth, because FTA is busy and it's not easy to update the portal. So even if your return filing is in September, these checks should be performed right now, that your taxable person type on your registration is correctly mentioned. Moving on. Rehan, with me?
Yeah, sorry, I'm having some technical issues. So if you just want to.
Today's that day.
Today's that day. Yeah, I don't know what's wrong with my laptop. So
can you shift to the next slide, or you're not able to shift as well?
I'm not,
or
no,
then. Okay. So after this, I'll cover the SBR first, so that that does not require slide. It's from memory that I can cover one of the topics. So if after this, there is an option that you would select your return to file under SBR. I'm sorry for this thing. It is the small business relief. The conditions being that your turnover is less than 3 million during the year. Again, your IFRS-based accounting becomes super important here, that your accounts are prepared in IFRS compliance, and the turnover, the revenue that you're taking to declare this 3 million is arrived or derived after IFRS compliant accounting being done. Very simple example that we had given earlier once is that if you're doing ticket, do you take the responsibility? Is any of the transfer through you, or get the fine? What the top is it 10,000 ticket or 10,000 dirham plus 1,000 commission, 11,000? What's your top line? That top line will define whether your revenue in the current period is 3 million or not. So if it is less than 3 million and you are not a free zone qualifying person, not taking that benefit, then you will file your return in SBR. What's good in SBR is SBR does not require you to file the financial statements also. So even if you have to give your revenue line item, you have to declare what's your revenue. You don't need to submit your financial statements. All other cases, even if you do not need to submit audited financial statements, you're supposed to submit your financial statements while filing your return. So all your numbers get logged in. Whatever you've done and signed and submitted, they get logged in. In SBR, other than your revenue line item, other amounts still stay open. So you can file your returns. All those who have penalties or any reasons, if they know that they're going to file the SBR, even if only in cases where you think certain expenses are pending, but your revenue line item is finalized, you can go ahead and file your your tax returns under SBR. Then there is no there is no need to calculate taxable income. You will not be required to make any payments, or you're not required to actually fill in any other fields other than election when you file for SBR. So this is what happens when you're filing SBR. But as discussed earlier, even if you do SBR or you file under some small business relief, elections have to be made. And these elections, today your company is doing 3 million or lesser, tomorrow your company might be doing far more turnover, and therefore these elections still remain important. So first, return, even if you're filing under SBR, this is a very wrong notion in the market that if I'm doing SBR, I don't need to think much, I don't need a consultant, I can do it on my own without my accountant knowing much, because it's just SBR, I just need to file my taxable return figure, right? But you will have to also make your elections, and therefore, even if it's SBR, the first return is important. Going forward, only thing that you need to consider under the simplicity of SBR is an internal computation of your taxable income, and will you be having a tax loss if you did a taxable computation. And if you have a tax loss, again, you need to realize how much is the tax loss and the benefit against the tax loss to do the full compliance. So if you elect that you want to take the tax loss forward, then you do not elect for small business relief. You do not select the small business relief, then the whole return and all the fields will populate on themselves, and you have to do the full compliance. So you need to see that if your loss is going to be 5,000 dirhams, say maybe you will be saving a 9% of 450 dirham against it, but the compliance cost will increase. So maybe still, even if you have loss, you might not consider claiming the loss. I would give you one another part to consider here. Even if you think your next year will be a profit, but your profit would be around 300,000 or less, 300 or 375,000 or less, the losses first get adjusted against whatever is the taxable income available. So even if your profit is going to be 350, 375, you end up paying zero tax. And even if you had a 300,000 carry forward of loss, the carry forward of loss is not adjusted over and above 375. It is adjusted against whatever is the first profit available. So if you think your profit is going to be only in and around that range, it still might not benefit you. So you need to consider those aspects. So elect small business relief. You don't need to do anything else. You need to file your financial turnover, and you need to make your elections. And that's all your SBR return requirement when you do the returns under the small business relief. Moving on to the other categories of the return filing. If you are filing your return under qualifying free zone person, if you say that I am a qualifying free zone person, there are certain additional fields other than your normal fields that will populate, in which the audited financial statements become compulsory. When you select audited financial statements, it will ask you for what is the opinion. Now, this is super interesting that they are going to ask you what is the opinion type given by the auditor. So is it qualified? Is it disclaimer? Is it this? This becomes important. This might trigger, not today, but in certain period of time, that if your audit opinion is qualified or if your audit opinion has a disclaimer, the selection, because there are certain parts of your financial statements that's qualified. This might be one of the indications from, and the if you're you need to do this and match the audited financial statements there. Adequate substance. This is interesting, and I think therefore we need to do a free zone whole part again. Free zone assessment, adequate assessment, it asks for additional field, which is your office area, how many operating staff are working there, and those information is also to be filled in other than the documentation attachment of your substance test. So there is a supporting document of substance test that you need to do an analysis and attach, but at the same time there are populating fields which you need to key in the data on the return itself. So therefore, free zone people who are planning to take the benefit need to be prepared with all this data to be filled in while filing the return on the portal. De minimis value, then the average calculation. Now this I will cover here itself. This is important both for your qualifying free zones and for all other financial statements, that you need to key in your average employee calculation. Now, what's this? This is the number of employees at the beginning of the period to the last of the period and average it out. Where does it become important is why are they asking this information, right? So this is somewhere to correlate your salary expenses. So if there is one person and your salary, so I say my average employee is 1 and my salary expense is 2 million. It does not speak with each other, right? Now, this is important when you're finalizing your financial statements, because in certain industries, say manufacturing industries, there is a habit of bifurcating your salary cost between your direct and indirect, and the direct salary becomes part of other direct costs, and your salary line item is not shown separately. Now, when you will be filing further for your information under the financial statements information, there is one line item asking for salary expense. So there is one of the two scenarios which will happen. Either you will have the salary expense from your P&L line item, which will not correlate to the number of employees you have if major chunk of your salary expense is sitting in the direct cost. Or you will have to put a salary cost which is not matching with your financial statements, because you will take out and figure out of your direct cost and put key in as a salary cost in the return, which will not directly tally with your salary cost in your financial statements. So it is important, if that amount is material, that in the disclosure of your direct cost, you show a breakup of salary so that your total salary declared in your financial statement versus average employees calculation makes sense to the reader or the FTA. So hence, for smaller businesses, it might not matter. But at the same time, we also have a habit of parking expenses of consultants or freelancers. If you're using their services, we consider a lot of them as salaries. But now when you will give the employee number, it will be the employee number as per your company's employees' visas and the MORE and the other database that is available. So it is important that you see which line item is showing your salary cost and where is your average number of employees, and does it correlate and does it make sense while declaring the details to the FTA. This is important both for the free zone and non-free zone, so I just tried and covered it here. Additional information under the free zone will also have your free zone schedule, your substance, as we said, the substance details, and of course the related party transaction, that is your transfer pricing, which we will cover in detail in the next slides, I guess. Moving on. Coming to the elections, as we said, whether it is your small business relief or whether it is your normal return or whatever be the case, if it's your first return, you would be making certain elections. And these elections will keep populating. So if you say realization basis, then it will ask you whether you're a bank or whether. So it has helped certain times in not making wrong choices. So if you are a bank and insurance, you do not have an option to select certain aspects for current assets, because that is on unrealized basis itself. Because it's the rule, that option, if you say that I am a bank or I am an insurance person, that option itself does not get populated. However, in case of tax groups, you need to be careful that even if one part of your tax group, one entity of yours is bank or insurance, you still need to select as yes. Are you a bank or insurance? You say yes. And the option as a whole group will be given as together in selecting your realization and transition benefits. Other elections that you will make, that is this is annual. So it will, the first two, that is realization transition, will appear as When you're doing the second return, these elections will not appear. So it's important. That's why it's irrevocable. After this, any discussion has to go off portal with FTA directly. On your returns every year, this will be auto-populated from your second year. Right? It's the only first year in which you have the election option to elect these. Small business relief and foreign PE, as we have said, it's annual elections. And qualifying group and business structuring, here is where you will fill in if you are part of qualifying group, or then after qualifying group, if you say that you're transferring certain benefits between the groups, you will have to key in the data, including the TRN of the qualifying group member to whom you're making the transfers. So this is unlike your VAT returns, where till now in your input or output, you do not key in the data of the counterparty or the counterparty's TRN for the review. These reviews of any transfers between qualifying group or business restructuring, transfers between one to another taxable persons, will be reconciled automatically once the returns are filed, because the TRNs are being keyed in. So if I say that it's a qualifying group relief, I'm transferring profit from here to somewhere, or the loss from here to somewhere, the somewhere will be identified. Important thing to note here is that these are moving groups. The group does not get defined only by 1 year. You don't have to declare 1 year and the next year there cannot be any addition or deletion in the group. It will keep moving. Next year, maybe your group has added one more entity, or one of the group entities has left, and the rules will keep changing. Here comes the importance of you keeping a proper track of data and documentation. In your first year, these were your tax group people, these were the qualifying group people, these were the entities in the group. Next year onwards, maybe this entity was not available, this entity was available. So because they can keep asking, they can ask you data up till 7 years from the filing of return. Your first return can be asked questions against 6 years down the line also. So you need to be prepared that these declarations that you're making, supporting documents, and all. So very important that you don't only rely on your accounting software for keeping all your information regarding your taxation. Accounting software will have your accounting data, but there are many other information which an accounting software will not capture unless it's an ERP developed for a specific purpose. Accounting software will not capture, and these will be the data which will be important for your return computation and any assessments or any query on the basis of this. Not just this, even your any reliefs, because qualifying group relief will be clawed back if any changes happen in 2 years. So you should know what happened, and during 2 years, if a company left the group, what will be the impact. So hence
That's where
important.
a system like Taxstar comes into play.
I was making the field there for you to pitch in and say that, right? I just kept the field ready for you to come and play. So there is where the Taxstar comes in. Yeah. Next slide, please. The accounting schedules, income statement, OCI, income, statement of other comprehensive income, the financial position, and audit confirmation, if any. So if you are getting the audits, as I said, the opinions matter. So it's not just when you take the credits, be careful in what the opinions are, because that will be declared. It might not have a direct correlation right now. It won't impact how you're filing your tax returns or anything. But of course, a qualified opinion just can be one of the triggers sometimes while doing the assessment, especially regarding the number to which the qualification applies. How is it also important is sometimes you have a qualification on the ECL, that is the expected credit loss calculation on your trade receivables. If you have elected in the realization basis that I want to declare my profit or loss on unrealized basis, that means your provision amount on your ECL calculation you are saying is correct, and I'm paying taxes on that basis. I'm not making any adjustments. I am paying my taxes on the basis of gain or losses, the provision on my books. And if an auditor qualifies your ECL calculation is not correct, it directly indicates that your computation somewhere might not be correct. ECL calculation is not right. And hence important that you look into your qualifications and your IFRS compliance while making these provisions It did not matter earlier so much if you were not into financing and the banks did not create issues. Management always thought that we know what the correct numbers are. But now when it goes to FTA, that can create a query, especially on your tax liability for that year, if that number is not reliable. So therefore, audit confirmations where you have audits, it becomes important. What are the few things you need to see in your financial statements? Currency conversions. So if you're reporting currencies, and there are many companies here who follow reporting currency as USD or Euro or any other currency. If you do that, central bank rates are to be applied for the currency conversion while making the reporting for corporate tax. Hence the conversion of your, not just the financial statements, all the balances that will impact your computation becomes important. Consolidation. When you have tax groups, you will have to file consolidated statements. We have highlighted it earlier. There is still not full clarity, or I think a declaration came some time ago wherein the FTA has clarified that now you will have to have two sets. If your tax group is not aligned with your actual consolidation, because your consolidation can happen at 50 plus, but your tax group can be only formed at 95 plus, and the 95 has to be legal plus control plus, and the consolidation only can happen at 50 plus and only management and control, even if not legal. So there are many reasons why your consolidation books could be different than your tax groups. And therefore, if your tax group crosses 50 million, you will have to have a separate special audited financial statement for your consolidated statements. Again, this will not be what is generated out of your normal accounting software. Accounting software might nullify certain transactions because it is making the consolidation based on your accounting consolidation. And hence, again, very important, the calculation of your consolidation statements, your nullifications, others, that summary is kept somewhere safe, and consolidation errors are avoided there, because that's a different consolidation than your normal one. OCI might not be important for a lot of people, but then if there are OCI positions, it makes a difference where you start from your calculation and your adjustments. So that needs to be seen. Audit requirements, 50 million plus, we have talked about. I would still suggest, as I said, because it's the first year, if you have never done your audits, if you're not sure of your accounting systems, if you're not sure your books are IFRS compliant, revenue recognition is IFRS compliant, the first tax period might be a good point to get, once your accounts audited, to see that your accounting policy is followed and your numbers are in compliance with IFRS, because they become basis of your tax returns. Going forward, foreign tax credit. Now, why this is important is that this will get populated at the end when you're doing your when your return filing. At the end, when you reach actually the tax computation and the tax payment, that time is where this will get populated. There won't be any trigger before that, but any foreign tax paid credit proofs have to be proofs have to be available while filing your returns to take the credit. Also the currency and the calculations, of course, that it is restriction. I'm not getting into the calculations of it, but the documentation needs to be available when you are filing your returns. Moving forward. This we all know, and therefore the webinar today, that any companies which had a delay in registration and did not register in time and had a 10,000 dirham penalty, that penalty can be waived off if you file your return within 7 months. So if you're following a standard Jan to December, the return filing date for you is not 30th September. For waiver, it will be 31st July. And hence, it is not enough time now that you file your return in time, that there are no surprises, and then you can apply for the waiver of the penalties and therefore returns.
For accountants, they have to cancel the holidays, right?
Sorry.
All accountants have to cancel the holidays.
Sorry, Rehan?
I was saying all accountants have to cancel their holidays now.
Yeah, one of my friends, she was asking me, the summer will be slow. I said, this summer, not for the tax and the accountants. This summer cannot be slow. So I think you have two targets now. Till 31st July are those who have any waivers or the smaller returns or something. And then I think by 30th September will be the real deal coming in. And I think we should not take it very simply. It's a portal. The portal can slow down. There can be issues by uploading things. So keeping anything until 30th September might not be a very good idea. So I would give myself 31st August as the due date, or max 15th September. Not like VAT returns. It cannot be 30th September for sure.
Well, if you have a Taxstar license, you can pre-populate all of your form fields on there and not have to worry about the slowdown in the FTA portal. So if you lose your information in the FTA portal, you always have it on Taxstar. So that's my plug.
Oh, that that's a good information. And then, of course, if you have a technical problem like we are having today, anyone can have some issues on either from the portal side or from your side. So yes, a backup on Taxstar can always help. And the Taxstar's backup with Rehan is always reliable, I can say. So yeah, moving on. We are doing good on Taxstar field today. And because it's tax return is the most relevant one. So I think it's called for. Okay. So very quickly, certain tips while you're filing the returns. And as we said, this is the first of the return filing tool that we are going to do. And we'll do one another, wherein we'll go into the details of specific cases, specific query-based cases. And there is where maybe we'll run through a portal through Taxstar or directly in the next return that we do. But here, when you start taxable person, I cannot emphasize enough the right category of taxable person. And as I was saying, the business activities that you do. The portal was asking right now when you log in, the portal asks you to update the activities, and it asks you to give the break, all the activities that you do. It's very important that you get that done, because when you come to the tax return, it asks you to fill in the revenue business activity wise, the percentage. So this will also be one of the declarations. So it cannot be that you have only one category of activity and just you say that my 100% revenue is from there, because it can have a VAT impact. It's a tax declaration. It's a figure going to FTA. It could tomorrow be used for any other analysis. So you need to be sure that your activity on the portal is updated correctly. If not, still time to go and update. And when you will go for your return filing, that will be auto-populated. And the percentages of what your revenue breakdown is will be there. Again, importance of your correct accounting and correct data saving. So your revenue breakdown in your accounting system has to be correct so that you can fill in the same while filing the tax returns. Elections, I cannot emphasize enough. I would even go to an extent that elections made in the first year should be signed off by the CFOs or the management, that they've agreed that these are the elections to be signed off, because this could tomorrow have tax impacts which might be serious. Employee count versus salary reconciliation that we are highlighted. Wherever on your financial statements you're clubbing or showing your your salary expenses should be looked into, so that your number of employees declared versus your salary expenses make sense. Transfer pricing documentation, if applicable, needs to be prepared now. During filing, all the non-applicable fields should be marked with a 0. You don't leave them blank. You need to mark all non-applicable fields 0. As Rehan has highlighted, you need to keep saving your progress, or need to have Taxstar and keep saving your progress on the portal. Pre-populated data, wherever it is coming, please don't take it as true and move forward. Always check. Maybe you made a mistake somewhere, and keep pre-populating everywhere else, or one of your elections or one of your database on taxable person or portal is incorrect and somebody has not paid attention and it is pre-populating everywhere. Any pre-population, you have to understand, is coming from some logic that you selected somewhere. So if something is coming pre-populated which does not make sense, that means somewhere else you have made a mistake. So it's important that we keep reviewing the pre-populated data as and when it appears to ensure that your data flow or all the elections made while filing the returns have been corrected now. So if I elected for, say, free zone person benefit no, then free zone information asking data should be coming in the free zone section. If you find that mistake, yes and no have been changed and therefore the data is correct. So it's important that we keep verifying that. I think it is logically kept so that you can only complete the schedules as you go. But sometimes we have seen that we feel that, okay, let me just key in some data here and go to the next schedule, and then I'll come back and redo this one. This is not a good idea. You have to complete the schedules in sequence. As we said, that what you key in one might impact what is populated or auto-populated or becoming as your option in the forthcoming slides or say the sections from the FTA portal. So important that you are ready and you're filing the data in sequence of how the flow of the tax return is. Audited accounts, financial statements, reconciliation, it should be prepared separately. If your numbers are not exactly what you're filing, don't make manual calculations only on the portal and file your return, because tomorrow you can be asked for how you made a reconciliation between your audited financial statements, because whenever you have your audited financial statements or even your financial statements, they're supposed to be attached with the return. Other than SBR, even if it's a non-audited financial statements, they're supposed to be attached as documents while you're filing the returns. So if you have said a number to be X in your financial statements and Y in your taxable return calculation, then you need to have a reco with you ready tomorrow for FTA if they come and ask you something. So if your revenue bifurcations or if your other revenue is somewhere else and you clubbed it in the top line, or you did a split of one expense, rent, direct and indirect, and you keyed it as one line amount, these reconciliations should be prepared to be sure that you have input the correct number and you can justify it tomorrow. All the arithmetics, of course, you need to check again. Declaration, you should have an internal process of somebody reviewing a draft and confirming. It's not a good idea to have the person making the return or populating the return, deciding on making the declaration and signing without a cross-check. And supporting documents, of course, again, should be reviewed because they are going to the FTA. And as Rehan has highlighted, if you make a mistake, if you need a revision tomorrow, if you will be filing a revised return, or if they trigger any queries, there are penalties, there are costs involved. So, and it is the first return. So you need to look into your control systems. You need to develop a system of approval. I think Techstar has an approval system also, Rehan?
Yeah, we've got two-stage approvals. So effectively what happens is once you completed your tax return, a copy of that can then go to your manager or your client or your director just to kind of review it, and they can add their comments to check. And the reason why we did that is obviously, you need at least 2 reviews. The classic accounting kind of process is it should have at least 2 reviews when you're reviewing any process. So we've added that in there as well.
Yeah, so I think that's something which is super important, because how FTA portal directly works is that there is one login user ID password. The FTA portal does not allow you to have multiple user ID passwords login settings. So when you're filing the return there, it is populated there. But then if using Taxstar or any other software or a facility that you build up internally in your ERP, it is important that you have multi-layer approval system while filing the return, and single person is not populating, attaching documents and filing the returns. Moving forward,
I think we're coming up to almost the end of the session, and we've got a few questions. So I think maybe we should just pause it and continue in the next session so we can answer a few questions. One thing I will announce is we are doing an in-person event at the end of June. I think it's the 26th of June. And so it will be a Taxstar and Ecovis JRB event, 25th of June, sorry. It will be a Ecovis and Taxstar joint event, and we'll have a technical session on corporation tax on the day. And we'll also do a demo of Taxstar, and we'll have a few panelists who will be joining us as well. So we'll be sending the invites for that over the next week or so. I'm just going to go through some of the questions, Rashmi. Is that okay with you?
Sure. Let's do that.
I mean, there's a crypto related question. So there's one person who's asked how corporation tax will work for crypto mining companies.
So as far as I'll not say I'm a pro in that area yet, but I will tell you one thing, that other than the activities specified in the law, no special category has been identified for crypto mining or any benefits. So it will more be governed from how is the accounting done for the crypto mining companies. It is IFRS that is more important to be understood for that space. Once you have your P&L and balance sheet correct, then the computation of tax is as it is for any other industry. And I don't see if the P&L balance sheet is correct, you will face any problem. The major problem, material problem, is in building and identifying your top line. First of all, your assets, the valuation of your assets. So if your value of the asset is created at what does the IFRS allow you to value of your investments or of your mining activities? What can you identify as your asset or WIP or whatever line item you call it on your balance sheet? What will hit your P&L? And from there, the corporate tax calculation would be impacted.
I'd give a shout out to a friend of mine, Joe David, who also owns Nephos Group. He's my go-to crypto guy. He came on my podcast as well. So if you just type in Nephos Group, Joe David, give him a DM. I'm sure he'll come back to you. He might know more from that point of view as well. So, So yeah. Okay. Another question. This is actually a comment. So can we get a copy of the video on YouTube? You'll get the webinar. It's available on LinkedIn. If you go to the Taxstar page on LinkedIn, you can see all of the previous webinars. We also have a Taxstar YouTube channel, which we've put all of the videos in there. And then the Taxstar website has all of the webinars on there as well. So you can either find it on our website, on LinkedIn, or on YouTube. I'm sure, Rashmi, I guess you're in the process of rejigging your website, so I'm sure you'll at some point be available on your website.
These will be posted, and also if somebody needs the presentation copies, if the slides are of importance to you and not going through the whole webinar, you can write to us, any one of us, on the LinkedIn, and we can send across even the slides to you. If only that
was a question from Gavin, who's a friend of mine and a customer. So Gavin, just reach out to me and we'll send you the slides. Janice has asked for FTCR in KSA for GCC held companies, not corporation tax, but zakat is applicable. So will this zakat be applicable to claim under FTCR in the UAE?
Yes.
So just one qualifying thing I'd mention with the zakat is the zakat is only applicable in companies in Saudi if you're GCC owned, right? So if you're foreign owned, you pay corporation tax in Saudi. Are they treating? I guess the question is, from a double taxation point of view, Rashmi, are they treating zakat as as corporation tax? So it's deductible if you have if there's some sort of double taxation?
Yes, I remember we had this discussion, and zakat is deductible and is calculated. The only thing is, as we know, that it is restricted to the percentage paid, so that calculation, of course, will apply. But zakat is treated as the corporate tax, and it is However, if you have Genesis number, let me reconfirm this as well. I remember it is, but I would rather reconfirm this one.
Okay, no, that's fine. Also, most of I guess just stating the obvious, in most cases with the double taxation, it's mainly on withholding tax. That's where there's going to be a lot of to and fro in terms of claiming that back and making sure you have the right documentation and processes in place to make sure that you can do that as well. So yeah. Okay. Barinda has confirmed that zakat may qualify. So thank you, Barinda.
Yes.
Much appreciated.
Thanks.
I think that's it for now. Then we'll wrap it up for today. We will do another session next in 2 weeks' time. We've got another session, so we'll carry on this session. Then, if you have any questions for us to cover, feel free to do that. I think what we will do is, I think maybe from July, maybe we can do some weekly sessions. Rashmi, doesn't have to be you. We could get Asghar as well to jump on as well, right? So, because I think what's going to happen is there's going to be a lot of questions that a lot of people have, and we can give our insights into what we've done and what our clients have done and customers done in terms of the way they treat the tax. Also, the FTA, they announced a session, right, for corporation tax return. As soon as I got the email, I clicked on it and it was fully booked.
Fully booked.
Yeah. So I think there's going to be a lot of there's going to be a struggle in terms of getting the right information out. So I think maybe from July onwards, maybe we could do something a little bit more frequent, but we will take that offline and see what we can do.
Yeah.
But I find these sessions very, very good. So, like I said, you're the best in the UAE when it comes to corporation tax. So thank you. And now you're certified with the EcoVis branding. So there you go. If anyone has any other questions, just feel free to reach out to us on LinkedIn DM. Barinda, the guy's name is Joe David. Yeah. So Mohammed has provided his name. So thank you. See, we've got a community that helps each other. So we're doing something right.
Nice.
Any final words from you, Rashmi?
No, I was just thinking that going from the question of regarding the crypto, we have one specialist, as we said, Joe, everyone knows for the crypto. But maybe when we are doing further sessions, we will have Ali Asghar join in for the tax returns and the technicalities. He is the closest from our team on the tax return and the compliances. We can also do one session perhaps on the IFRS related topics or concerns. We can have Salman come in, and when it is industry specific IFRS related queries, we can help the industry. So we can take one session across the challenges on major industries where we have seen practically how the IFRS computation, maybe that we do a little earlier so that people, before they finalize their accounts, could use as well.
Yeah, no, great suggestion. Cool. All right. I hope everyone enjoys the rest of the day. Rashmi, thank you very much for your insights.
Thank you, Rehan, and everyone.